Hey, ladies and gentlemen, I'm your host, Brian Caderna, and you are now listening to the Caderna Podcast. Today's episode is one of the most fascinating and eye-opening interviews that I've done, and I don't say that lightly. Our guest is Jared Bibler, the author of the new book, Iceland's Secret, the Untold Story of the World's Biggest Con. Jared Bibler is a graduate of MIT who began his career as a software engineer. He eventually made his way to Wall Street as a consultant before moving to Iceland to support the Icelandic pension fund's foreign investments as a Charted Financial Analyst, or CFA. He resigned from this job at one of Iceland's biggest banks just days before the 2008 financial crisis. He was subsequently hired to head a special investigation team at the Icelandic markets regulator. During his role, Jared uncovered just how far financial corruption spread across the globe. Now, if you've listened to my interview a few months ago with Jim Campbell, the famed investigator of the Madoff family, you'll notice there's several parallels here, but this happens to be on a much larger scale, and to date really hasn't received nearly the attention you think it would. So what we discuss is how the world's largest institutions can go awry, and how such scandals of this can go unchecked all the way to the very end. You might notice my voice sounding a bit raspy during our recording. I do apologize, as I was just recovering from strep throat at the time, but I promise it does not take away from an incredible interview. So now joining us from Switzerland, here is Jared Bibler.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Caderna Podcast.
So this book, I mean, it tells quite a story. I mean, as the title allows us. How did you decide that you wanted to kind of expose all that had happened and unfolded in Iceland?
Well, I think that I felt almost like a compulsion. I had to write this book because I didn't feel, at least in the English-speaking world, that there was really anything about this story. And I noticed you had Jim Campbell on the other week for an excellent interview about the Madoff scandal. This was a scandal at least several times bigger than that, and with probably much more devastating consequences for a whole country. And I really wanted to get that unbelievable story of corruption and regulatory failure out for people to be able to read and learn from.
Yeah, definitely. And it's funny you mentioned the interview I just had with Jim in his book Madoff Talks that recently came out. So I feel like that Madoff is so synonymous, of course, with corruption. It seems like everyone around the world knows that name instantly. It's almost like speaking of the devil. But when I got your book and I saw the title, even in the world of finance, I was quite unaware of what happened in Iceland. So why do you think this has remained a secret to so many people for over a decade now?
I don't have a great answer for you. I mean, of course, part of it is that Iceland was kind of swept under the rug or swept aside with all of the stories of 2008. But as you can see in the book, the Iceland story is not really anything about subprime loans or anything like this. And had it happened, actually the crisis in Iceland could have and almost started in 2006. Had it happened outside of that 2008 period, I think it would have got a lot more attention because it was such a big deal. But as it was, it got overshadowed by everything else. However, proportionally, what happened in Iceland in 2008 was much bigger than what happened anywhere else. You would have needed 300 Lehman Brothers collapses in the US to equal what happened to us in Iceland. So imagine if the whole financial system collapsed in 3 days, and also the stock market went to nearly zero on the same period. That's what we experienced.
Wow. And I mean, I'm not overly familiar with Iceland's economy, but is it a little bit more sheltered? I mean, certainly compared to the United States or another superpower, but I assume that that's part of the reason why maybe that news didn't reach such an international scene. Was it much more isolated in the negative outcome?
Well, no, isolated, and it's a very small population. It's a big island, but it has this very small population, and there's not a lot of international media presence there in general. So if you read an article about Iceland, it was usually written out of Stockholm or one of the Nordic capitals.
Mhm.
There's just very low exchange of information, I think, or Iceland tends to emphasize. I mean, it's become a huge tourist destination post-crisis. So Iceland has 10 tourists for every person each year these days, which is kind of, in my mind, ruined the country a bit. But so it's marketed as a tourist place, and it's talked about as a tourist place in the popular press. But the economic story and the corruption has never really come out.
And is that intentionally? Is that something that the country would rather just kind of hide and say, let's kind of skip this dark period of history?
That's a really good question. I've had, I don't think so. Maybe officially, yes. But I've had such good reception for the book in Iceland the last couple of weeks. The book's been out a couple of weeks, 3 weeks now. And the reception in Iceland has been really supportive and very positive. And many have commented that they didn't understand their own crisis until they read this story. I think it's the first story that puts things in both a global perspective and kind of a historical perspective in how it unfolded in Iceland. I mean, this is the story of like 3 Enrons going bust in a week. An Enron was a big story. You probably remember it.
Of course, yeah.
Yeah, so imagine 3 entities the size of Enron going bust in a place with a population of just a few 100,000 people. It's an incredible story. Not just that them going bust, but how were they ever allowed to grow to that size, 11 times the size of the economy?
Wow.
And be virtually Ponzi schemes.
And I do want to get into that because that's almost unbelievable just to hear. But you had mentioned that Iceland right now, a lot of the people are really receptive to your book. I got to ask, on the flip side, are there folks that were in the know that, perhaps did not want to hear about this and have given you a gag order of sorts?
No gag order, but there's one character but a person in the book. She's not even named in the book, but she's fairly prominent now in the central bank. She has some choice quotes for me at the end of the story where she, because after a lot of the story of the book is how I built up the oversight and investigation capacity of the regulator, which didn't really exist before. And I was kind of hired as one of the only investigators post-crisis to look into these 3 giant scams. And we ended up developing a really nice team, great people, and great capability to, read emails and do all the hardcore investigative things that we needed to do. That team was taken apart in 2011, just about a year and a half after it was formed. And the woman who took it apart told me, don't be naive, Jared. This stuff is all behind us. We're not going to see crime like this anymore. We don't need this team anymore. Something like this. She's come out now in the press and completely denied having said any of that. So there's a bit of a stir there around that, which I think is good, because the way that the country proceeded, I think we're right. Well, actually, I was just told last week by someone I worked very closely with in the investigations, who then moved over and became a compliance person in one of the banks. He told me, Jared, we're right back in 2006 or 7 here. He said, kind of nothing has been learned. So I fear for Iceland. Yeah. Wow. Well, that's according to him. I don't live there anymore. But I have suspected that from the news I've been seeing, that it's back in a bubble again. But the real reason I wrote the book is Iceland is a small place and probably can be quickly forgotten by most of the world. But I think the story has real relevance today for the US, for the UK, for Switzerland, for the bigger markets. I think that this is, the European actually said, to understand how the world works, you need to understand Iceland's secret. So I think that's true. Actually, I like that quote.
Yeah, it's very fitting. And can you give us a little backstory here of how these 3 enormous banks got to the stage that they were at, leading up to 2008, pretty much unchecked, it sounds like. And what exactly was it? You mentioned a Ponzi scheme. We talked a little bit about Madoff here in America. What were these banks doing, and how did it really collapse come 2008?
Okay, that's great question. So they started in '98 being partially privatized. There was a few different. Iceland had at that time maybe 220 or 250,000 people, and it had some very kind of stodgy old institutions. One was called the Agriculture Bank, or Búnaðarbanki in Icelandic. There's another bank that was mainly lending to the fisheries, and so on. They had some very small collective financial institutions, and those were partially listed. The government still owned big pieces of them, but in '98 they were partially listed on this new stock market in Iceland. And as it turns out, right away they began trading in their own shares. So they had their own traders using bank money to keep the price of their own shares up, and nobody kind of saw any problem with that. And that was the DNA of how they grew. Actually, there was never a time when and they grew so big that they crowded out every other company on the market. They made up around 90% of the market cap of the market by the time it was over.
Wow.
They grew so big because they were able to basically set their own share price. And on the back of their successful share price performance, they were then able, starting in the early 2000s, on the global debt markets to borrow, to issue bonds. The biggest early investors were the German banks, and they went in banks and then all over the world. Even a lot of American pension funds lost huge on these. There's a footnote in the book. I don't have it in front of me now, but I mean, it was a lot of, like the Iowa teachers retirement system, I think, was one. And there, a lot of Midwestern funds lost big on this because these entities became global, and in their DNA was that they never let their share price go down. So that became more and more expensive for them, by the way, as the years went on. And so that by the time that subprime thing started to unfold in the US in early 2007, 2008, they had prop desk traders buying sometimes 100% of the stock market volume for that day, with bank money to keep the price from going down. So it was a massive deception from the beginning, which
Wow.
kind of took over the country's economy. I mean, every smart engineering grad from Iceland, or any smart grad, legal grad, they all went to work for these banks. The banks just became everything, but there was nothing behind them. Anyway, go ahead. Sorry.
No, I just wanted to interject there. So the banks initially, does it sound like they were primarily like the primary holder of their own stock? They were just using their own capital to keep buying up their stock to make it so enormous, or what were the mechanics of that?
Yeah, so I mean, at first it didn't take much because the market was so sleepy and so small. If they sensed the price going down, they just bought a few shares, and the price stabilized. I think it started like that. It kind of like in Madoff, it starts with one small forgery or one small action.
Yep.
And then but then they couldn't. Even years later, one of the banks had an outside executive, not from Iceland, and he found out about this. He went to a top law firm in London and explained what the bank was doing. And this guy writes a really strong. This London lawyer writes a really strong email. Says, no, you have to tell the other executives they have to stop this. This is illegal. This is a huge reputational risk, and so on. He passes the message on, and the general counsel of the Icelandic bank says, if we stop this behavior, the markets will lose their faith in us, which is such a perversion of the idea, right? But and that takes me to actually when you were sort of surprised in the Madoff interview with Jim Campbell, how Bernie Madoff rationalized his own behavior.
Yep.
But that is what I saw all the way through, and continues to this day. So even though CEOs of these banks were convicted for further share price manipulation specifically and served some prison time, not much, but some, to this day, as far as I know, they say, no, we had a beautiful bank, and it was the collapse of Lehman Brothers that brought it down.
Oh my goodness.
So there's no, it's a cognitive dissonance there.
Yeah.
And the other connection I saw with that interview was, I think one of you said the quote, it was a complete regulatory failure for 40 years. And that was the same in Iceland. I mean, there were many signs that were ignored that this was going on. And there were many chances to stop it. But by the time, and I think here's the difference with Madoff, everyone knows Madoff, but not everyone suffered from it, But in Iceland, everyone suffered from the collapse of those banks. I mean, this was a disastrous time. Very close. There was civil unrest and very close to a breakdown of the society.
Was there, and just to jump in, before 2008, when things hit the fan, was there another moment in time that was kind of like a tipping point where
Yes.
people said, hey, something's going on here, let's fix it, and we just blew straight past that stop sign?
That's right. In 2006, in March, there was what was later called the mini crisis. At the time, it seemed like the only, it wasn't the big one yet. But what happened then was that, and there's some amazing charts and visuals about this. What happened then was that Merrill Lynch and Danske Bank and some other international institutions, also the IMF, within a few months, they all looked closely at the Icelandic banks and Icelandic finance. At this point, those banks had been growing, doubling their balance sheet every year for like 3 or 4 years at that point. So they were already growing way out of, and that's the other Ponzi aspect of it, is the fast growth. But they had already way outgrown the size of the economy, and that prompted these international analysts, credit analysts, to come and look. And they said, whoa, we don't know what these banks are doing. There's also a lot of interconnected ownership, cross ownership. And they said, we don't really know how they're making money. We recommend, and they're way levered now. We don't know how they're going to roll over this debt. At this point, I think in 2006, they each had like more than $1 billion of debt coming due in the next few months or 12 months that they had to roll over. And so that was the alarm bell. And at that point, the Icelandic currency dropped. The market dropped similarly. And that was really the alarm bell. And also the IMF came and said, we think this is unsustainable and so on. And that was the chance to take stock. But that was just kind of cheerled right through by the Icelandic president and politicians. Nobody wanted the party to stop by this point. So after that point, the banks continued to grow for another 2.5 years until the ultimate collapse. Which, I mean, I don't want to exaggerate it or make too much of it, but especially for a few weeks after they collapsed, life was extremely uncertain. I mean, imagine if you didn't have access to any of the money you have in your bank accounts. You just had what's in your wallet. But the price for what you can get for what cash you have in your wallet is, you don't know what it's going to buy tomorrow. And that was kind of that was the way it was for maybe 8 really dark weeks. But that whole winter after the collapse was quite dark.
Yeah, it sounds just terrifying. Like over here, we had the Great Recession. I mean, that actually sounds like a Great Depression that Iceland could have gone through. You said about 8 weeks. I mean, how did they rebound from that? How did the economy come back? And has it come back to kind of what you would expect?
Well, I know that. So on a personal level, we lost our house and a lot of our savings. And that never comes back. When you lose your house, it's not like then later someone hands you a house. Yeah. And that happened to a lot of people. Anyone who had bought a new car, almost anyone, the cars were all repossessed. And a lot of people lost their houses. and our pension funds never recovered. There was finally Iceland did go to the IMF, and things started to stabilize in the winter of 08, 09 a bit, enough that at first the supermarket shelves were starting to go empty, and there was actually a run on the banks. There was almost not enough cash in the country to meet the demand for cash. Stuff started to stabilize that winter such that we could kind of scrape by for a few years. But from 09 to 2012-13, it was really living close to the bone for many years, and a lot of people left Iceland for better opportunities somewhere else in those years. But what rebounded the economy was tourism, which I already alluded to. So it kind of was selling off the city to the lowest bidder in terms of all the nice old neighborhoods where we used to live became Airbnb ghettos. And you go there now, and you can go into shops on the main street of Reykjavik and not hear any Icelandic spoken, because even the store employees are not Icelandic anymore, because there's so many tourists. There's not enough people to work in all the places that the tourists demand. So it's almost like the country has been outsourced.
Yeah.
Yeah.
It's been taken over by the globe. That's wild. And that's one of the things I wanted to ask about was you hear, bank runs, people actually getting their cash in the bank, running out of money. Just the idea in the 21st century is almost hard to fathom. What prevented that? Did it just come close, or was that the IMF kind of bailed out the banks?
I was there for that. I went to the bank. It was 2 weeks after the collapse, something like this. They enacted an emergency law which split the banks into domestic and foreign pieces right away, and that was what actually enabled them to finally collapse. They had wanted to go bankrupt for months. They didn't have a good way to do that. Finally, the government passed an emergency law at the beginning of October 2008, and the banks split. So you could still go in and your accounts were still active, and the government had said, we will back your deposits 100%. But one time I was in the bank for some other reason, and I noticed that, and it was the middle of the day, I noticed that the place was full, and it was a suburban branch as well. It was not downtown. And the place was full. People were waiting for their chance to go to the tellers. And I noticed that people were it was quiet. It was totally quiet. But I just noticed everyone's taking cash from the tellers and walking away. And I called my wife and I said, hey, I think there's a run going on here. It was quiet, but it was happening. And she said, yeah, you should take it out as much as you can. And then I learned later that the country was very close to running out of cash, physical cash, because up till 2008, it was a cashless society. We never had cash. Everything was, you could even pay for like a pack of gum on your debit card. It was super efficient payment system. Everybody used that, and people didn't need cash. But suddenly there was a huge demand for cash, and what we found out later is that the central bank had, luckily, vaults full of old cash they had pulled out of circulation that they were intending to burn, to destroy. They hadn't gotten around to it yet. So they re-released this old currency, some of it torn and so on, just to meet the demand for paper. Yeah.
That's wild. And if you don't mind, which of the three banks did you work for?
I worked for Landsbanki. I actually worked technically for something called Landsvaki, which was a asset management company owned by the bank. And so we ran investment funds. The first part of the book is about this, was kind of some stories from the bubble years where we were running investment funds and all these exotic products. I was running a fund of hedge funds as well as a real estate fund and private equity funds. In your role, were you privy to kind of what was going on, or were you like next door to it, or how did you? Yeah, that's a good way to say next door to it. I saw a lot that made me lose sleep, and I'm happy to say that I ultimately resigned from that, and just because I didn't like what we were doing with clients' money. But the big fraud about buying the shares on the market every day, I had no idea. That was going on. I knew that the banks. Actually, I felt uneasy. I knew that the share performance didn't seem to make any sense, because already in early 2007, in the asset management world, people were talking about subprime in the U.S. and we were really following that closely already. And banks around the world were having trouble already in 2007. Definitely their share prices were suffering. But in Iceland, the share prices in 2007 were still going up, which I couldn't get my head around at the time.
Yeah.
But I had my own worries with my own funds. I mean, we were doing terrible stuff with investor money, which kept me up. And I had no. So I thought I was seeing a scam, and I resigned over it ultimately. But I had no idea that like the real scam was 1,000 times bigger than what was bothering me every night. That was small potatoes.
Wow.
Next to the whole imagine the whole stock market of a country just being created out of thin air.
It's
all the valuations. Yeah.
It's just surreal. Yeah. And where did this culture of scamming kind of begin? Like, is this something that was going on before these big three banks, or, I mean, how did it just get so far? It's just like with Madoff. It's almost like hard to even wrap your head around it.
Well, but I think another reason I wrote the book is I think Madoff and this story, these are much closer to the norm of how the world works than the exception. You know, I mean, Madoff only came out, and it takes a big crash like we had in 2008 to pull these stories out, to let us see how things were really going. Like your guest said, Madoff, otherwise he'd still be going today, and the fund would be worth $240 billion.
Yeah.
And that's probably true with the Icelandic banks as well. They'd probably have continued. As long as you have easy money, low interest rates, and easy to borrow, and easy to lever up balance sheets, that's when I think this stuff happens. And it can go for a long time. And the reason it goes for a long time is that the insiders, whoever's running these companies, they benefit tremendously. So their incentive is always to keep the party going, because they're getting huge salaries, they're getting private jets, they're getting, their life's dreams basically. And on the other side, there's no incentive. He talked about Madoff. He talks about the SEC's failures. There's SEC comes in my book as well. I mean, I take to the SEC the case of the Icelandic banks that raised billions in debt from U.S. investors on the back of these fraudulent share prices. I thought the SEC would love this. And they listened to me politely for a half hour or so. I had a conference call with maybe, it was probably 6 lawyers in the room. And they thanked me very politely, and they said, don't call us, we'll call you. And that was it. But also in Iceland, the regulatory failures were incredible. And I think in all cases, it's because of, in almost all markets in the world, the incentive to be a really hard-nosed and aggressive regulator. Actually, if you try that in any regulator, you're going to get fired. You're going to get walked to the door within probably a year, because the culture is not set up for that. Nobody's getting a bonus based on how big of a criminal case they bring in, and really the pay structure of most regulators. The trade-off is, if you leave Wall Street, or if you leave the city of London and you work for the regulator, you're going to have much fewer hours at work. You're going to have better work-life balance, and you're going to take home maybe half of what you would take home in a bank. So that's the trade-off. But a lot of people in the regulator, they maybe want to work in a bank, so they're not going to go too hard after something that they want to, where they want to benefit and they want a job in the future. So all the incentives are misaligned. That's true. To take something down. And so I think that's why I really think the Iceland story is kind of the story, because it has to be happening everywhere.
Yeah, I know there's just so many questions off of that. And if I could kind of chip away at them, you mentioned that having a low interest rate environment, easy access to money can kind of lend itself to some of this aggressive, unscrupulous behavior. Is that what you see as some of the fear right now, where interest rates are at rock bottom and been staying there?
Yes, exactly. Yeah, I think we're headed. I think 2008 was like the little tremor before the big one. And really, we had the chance in '08 to, what if 2008 was like the First World War, and then people called that, after the First World War, they called that the Great War, and they said it would never happen. Now we call it the global financial crisis, like there's only going to be one, the global financial. That's what I really worry about, is that that was the kind of the tremor to warn us, hey, you need to really look at how your system is structured. And we tweaked around at the edges a bit with, like the Volcker rule within the Dodd-Frank Act. That was a good idea, I think. But the implementation of that took years. And now the Fed, even I think last year, the Fed is chipping away at it more. So I don't think we really, not in Iceland certainly, and probably nowhere else, did we really make the changes that we needed to prevent a repeat of '08.
So is there anything specific you could point to that does give you a pause right now that you are very concerned about, like anything specific and concrete? Or is it just a general feeling?
I guess it's the same general feeling I had in 2007 when the Icelandic bank's shares are going up, but we have all this bad news from abroad about financial shares, and it doesn't make sense. I have that same feeling now, but look, I've had it for a few years, and by the way, I hope I'm wrong. I would be happy to be wrong.
Sure.
Because one time living through that collapse is enough, for a life. I think, yeah, that's a really good question. I live in Switzerland now. Here in Switzerland, there's been a lot of, I don't know if you probably haven't been following the Credit Suisse scandals, but there's just been one after another with Credit Suisse, which is our second biggest bank. So here on the ground, there's certainly enough daily news to be concerned that one of our biggest institutions is, they call it, there was a news headline last week. It was like moral rot, they said. Like the institution was morally rotten. They were involved in Greensill, in Archegos, and now there's I think the newest story is about they lent money to the government of, I think it was Mozambique, to buy a fleet of tuna fishing boats, and the money that the government people from Mozambique who wanted this money, they said, oh, but don't send it to us at the government, send it through this middleman in the UAE or some offshore guy who was just paying this money out as cash to them. And Credit Suisse went along and did this deal. And it's like, how did this possibly pass muster?
Yeah.
And so that's the uneasy feeling is when I've also been involved since as a regulator. The uneasy feeling is that when I go in and look at some of these investigation cases, when you see stuff like I just described to you, and you realize like that's not a one-off of a couple of bad apples in the bank, but the bank was basically structured to do things like this. That's what gives me pause. I think the Iceland story is really instructive. Well, it changed my worldview. I used to be super kind of almost libertarian, pro-markets guy, and so on. But when I realized that a whole bank's they were buying their own shares for so long that every department in the bank eventually became involved, and it became not only something that they did on the side, but it became their whole business, because they would end up accumulating $200-300 million worth of shares in just one financial quarter. And by the end of the quarter, they had to get those off their books. So a big part of the investigation mystery for me was, where did the shares go? And where I finally figured out they went was that another desk at the bank, the brokers would buy all the shares in like one trade or two trades, and then the shares would disappear from the bank's books the same day. And it took me a few months to piece this together, but the places that it disappeared, and here we tie into the another thing that makes me super uneasy, is the global system of offshore finance. So the shares in the biggest Icelandic bank would disappear to these companies registered in the British Virgin Islands. And these were companies that you and I have never heard of, with funny names. And one of these companies could buy, in one trade, could buy $200 million worth of bank shares. And then it turned out that that company had just been formed the week before, and nobody knew who the owners were, and that the capital, all the money for the deal, came from the bank itself, from the bank's own loan book. So in this way, the not only was the trading side of the bank involved in this deception, but actually the credit desk, the core of the bank, what the bank is supposed to be doing is making good, commercial loans. And a lot of the bank's loan activities were to covering up its own share hiding activities. So this that just corrupted the whole system, and it was like that for years. It perpetuated and got better. They got better and better at hiding these things as the years went on.
It's insane. I mean, I think of myself as a financial advisor, and how much, with all the securities regulation and compliance that I'm subject to, just dealing with the average Joe's retirement plan. And we have that rule, know your customer. You always have to know who your customer is. There's a lot of background to go into that. Yet it sounds like this trading desk could go work with a fund in the British Virgin Islands and take a $200 million trade, and we don't even know who's on the other side of that trade, really. And it sounds like they're the ones financing that.
Well, but the brokerage desk had just set up that company themselves. See, like, it's even worse. This isn't some anonymous fund. They had gone to the BVI, they had gone to a lawyer in Luxembourg and said, we need a new shellco. And he would say, yeah, sure. I got these 3 ready for you. And they'd set one up. And then in some cases, the brokers themselves, in other cases, the compliance person himself. So there's a famous email where a compliance person in one of the Icelandic banks says to the brokers, look, we have too many shares and the end of the quarter is in 2 days. So we need to get these off our books. He says, why don't you take these 100 million and set up another offshore entity, or get them over to this entity. And meanwhile, I, the head of compliance, will do the same with this other offshore entity, something like that. And so even the head of compliance is a word I hate, by the way, because it shows you that they're just doing the minimum. It's like right in the word's definition is that they're complying. It's not like the anti-fraud department or something. It's the going along with the rules department. So that he's just like, well, if I can hide these shares offshore, I did my job because I complied with the rules. And so that's the culture is about meeting the letter of the rule, but not anything about the spirit of it. Yeah.
Jeez. And so that's what I was going to kind of ask, was there somebody on the other side who could also be punished in this whole scam? But it sounds like so much of it was internal, just kind of moving from one pocket to another.
Yeah, because then the CEO of the bank would go to the credit desk and he'd say, you need to make this loan for 200 million to this company that you've never heard of, and sometimes, rarely, employees would push back and do their job and say, hey, this isn't right, but that was very rare. Usually it's a culture of going along, and so employees would say, oh yeah, sure, yeah, we'll get the paperwork ready. If you look at the large exposures for Kaupthing, which was the biggest of the Icelandic banks, they were leaked. There was a large exposure report. So these are the biggest loans the bank made in 2008. If you flip through that report, which is on WikiLeaks, I think it's still out there, you'll see that they're all capitalized by the bank's own shares, all the biggest deals. So effectively, the bank's job became buying up and hiding its own shares. I mean, it's almost unbelievable, but that's
nuts.
That's what it was.
Just nuts.
Yeah.
And now, do you think, in your opinion, that the punishment or the aftermath of this went far enough to prevent a repeat, or was it just kind of let's clean this up as fast as we can, clean up the spill on aisle 5, and just move forward?
I think it was that the latter. Although I'm proud to say, we did some great investigations. These are the largest cases of share price manipulation in the world that have ever been prosecuted. The cases, depending on how you measure them, they're in the billions of dollars each of the 3 banks for each of these manipulation cases. And so that's something that we did in tiny Iceland that nobody in like the UK or the US did. So that's pretty nice. But the pressure on me to wind down the investigations started right away. It started even when I was in the first big bank, and I didn't even have a team. It was just me looking at these trades. Later I had a team, but at first it was just me looking at the trades. There's pressure to shut the case down and to send it off quicker. And that continued, and finally even the teams were disassembled already in 2011, so 10 years ago. It was kind of, nothing more, like you say, nothing more to see here. As Barack Obama, I think he famously said, right, let's look to the future. That was his reason for not prosecuting anybody involved in 2008. I think those are terrible words, actually, when it's in that context. It's great to look to the future, but if you've had like a murder or something, you don't, you don't just look to the future. And so this was kind of in Iceland anyway, this was kind of people did die from this. We had to cut hospitals, and there was real world terrible consequences from the activities of these few people when the banks collapsed. And so I think it was worthy of a big investigation, and we should have investigated more, because we only maybe got to 5% of the cases total.
And speaking to the investigation, how did you get that call? Like, why did they say, hey, let's go grab Jared, he's the man for the job?
Well, that was kind of a nice coincidence. I mean, I had quit, like I said, I quit Landsbanki at the beginning of October of 2008. And then the next week, all the 3 banks collapsed. So actually I quit, my last day was a Friday, and my bank collapsed on the next Tuesday. And by the next Thursday, they were all collapsed. And so then I had been thinking, it'll be easy. I had a lot of pension fund clients in Iceland. I thought it'll be easy to go work for a pension fund. Then there was no jobs for that first 6 months. I was unemployed, and that was the dark winter that I mentioned.
Yeah.
And then I applied right away, because I heard that the regulator might need new people to look into things after the crisis. So I applied right away, and then months later, it was probably in March of 2009, they wrote me and they said, would you like to be considered to be an investigator? And I was like, yeah, of course. I mean, I needed a job, and it sounded like a good job, and it was a good job. And they said, yeah, we're thinking of hiring one person to investigate the crisis.
Who's they? Is this the government?
Yeah, this was the government regulator. This would be like the SEC of Iceland.
Okay.
And they said, we're thinking of hiring one person, because we need a person to look at the crisis. It's like, okay. So I guess they had like 200 applicants for this, and they ended up hiring me and one other guy. And I think in my case, I speak Icelandic. I mean, I learned there, so I can read all the emails and so on. But I was an outsider. I mean, I had only lived there since 2004, so I'd only lived there a few years, and I wasn't connected to anybody, and that's a problem in a small society. When there's too many personal connections. So I didn't even know the names of the executives of the biggest Icelandic bank, the one that we started investigating. So, but to most Icelanders, these were by then household names. And so I think that was probably why they hired me. And I had a great, experience from Wall Street and also from the asset management side, which, typically people working in regulators, they went to law school, and they never worked on a trading desk. And so I think I had the experience to really kind of see through, to do these big cases.
Yeah. And was there ultimately like a culprit in this, or was it just like a toxic culture that, hey, all these banks are rotten, we got to hit the reset button, or were there like a mastermind behind so much that happened?
In terms of the share price manipulation, that was pretty well tracked by the biggest bank, by the CEO and the chairman of the board of that bank. So in that case, they were definitely the masterminds. And we had emails to show that they were following this very closely. In fact, not even the head of the prop desk, but one of the prop traders was kind of earmarked. He was the guy to buy their own shares on the domestic market, and that's what he focused on every day. And at the end of every day, he would send the top two guys in the bank. So we're talking like 4 levels above him or 5 levels above him. He would send these two guys the day's trading results and say, look, I bought this many shares today. The price is up 0.5%. It cost me this much, and so on like this. So he gave them a daily. So they were looking at this every day because this was their lifeline. They knew that if the bank actually, I have a quote which I found too late to get into the book, but the same executive who I mentioned, who had contacted a lawyer in London to find out legal opinion on the share manipulation, he said later that bank was insolvent in 2005. The only way and this is again the Ponzi element, the only way these banks kept going is by doubling their balance sheet quickly. So they would have all these bad loans and they'd be seriously in trouble. But if they could borrow more, and this is where the easy money piece comes in, as long as you can keep borrowing more and growing, you can grow your way out of trouble. As long as you have access to that new money. So as long as you can double, and then the hope is that the next year you make good loans. But they didn't, that because also the easy money culture means you're not careful with the loans that you make, right? So I can't remember where I was going with this, but they were able to keep growing. Oh yeah, and that still comes back again. That's why the share price was so key, because the shares were never allowed to tell the story of a bank in trouble. Because if in the case of Lehman, if you look at the Lehman chart, it was dropping for 2 years or so, pretty steadily over the last 2 years of Lehman's life. The shares are going down, and then on the last day, it's down maybe most of the way, and then it just has a little ways to go to collapse. Yeah. And so in that case, the market kind of told the story, right? But in Iceland, the shares during the Lehman period of those 2 years, the shares in Iceland, the banks continued to go up for the first part of that. Finally, in 2008, they start to come down a bit. But on the last day, it's like they drive off a cliff, because the day before they went bust, they still had as much value as they'd had in 2007 or 6. Yeah. And so because they didn't let the market signal, because they had completely corrupted the market, nobody could see that they were and that's what made the crash so dire. Because if we had these shares going down for 2 years, people would have been talking about it, reacting to it. Maybe there would have even been a bidder, or maybe there was some interest in these banks at lower share prices. But we will never know, because they never let that happen.
Yeah, it's like the writing on the wall was kind of hidden. It was not
exactly.
there to be seen.
Yeah.
And so you said it really went all the way to the top. So these CEOs, I mean, how were they punished? What was time in jail, fines? Like what happened to them?
They were all charged for the share price manipulation. They had also, the prosecutor, who was new at his job, but he did a pretty good job, I think, pretty great job. he didn't. These share price manipulation cases were so big. In both the first and second bank, he took actually all three banks, he took smaller cases all the way through first, as like test cases. So there were smaller pieces of this involving one share sale that was suspicious. So, for example, the biggest bank, Kaupthing, they enlisted someone from the Qatari royal family to buy 5% in the bank in 2008. And they announced, this was after Lehman. So Lehman collapsed, I think, the 15th. And then a couple of days later, they announced that that this Sheikh Al-Thani was buying 5% in their bank. But he didn't actually, the Sheikh didn't bring in any money. In fact, he was paid, I think, $50 million to have his name on the deal. So he was paid. So he got his money. And the bank, again, with loans, they created a shell company in the BVI, and they loaned it the amount of money that it needed to buy 5% of the bank. And then they took the shares that the prop desk had been buying up, and they put it in that company. So that case went separately from the big market manipulation case as a test. And in that case, the executive chairman, the CEO, and two other men were found guilty. And they were sentenced to 4 to 5 years each, around that, I think. Maybe between 3 and 5. I think it was between 3 and 5.5. Something like that. And then the big case came. So it's funny because when the big cases came, the judges often said, well, these guys are have already been sentenced 5 years, so we're not going to give them any more. It's like they've already, or give them very little more. And the other piece of that is that in many cases, I think they served maybe a year in a country club prison in Iceland, and then they were out. So,
do you follow them at all? Like, did they serve their mini sentence and now are they back to their same old tricks, or are they just completely out of the public eye? Like, any idea what happened to them?
I was there, and I believe one of them. I was there, and I was visiting Iceland. I was in a restaurant, and I saw one of them come in with his wife for dinner, and it was while he was on. He was still serving his time, but he had been let out. He was in Reykjavik. He had to wear a ankle bracelet. He had to be home by 8 o'clock each night or something like that. But on weekends, he was allowed to stay out till 11 or something. So he was at a restaurant with his wife. I think they have done a lot of PR to say that this was all the fault of Lehman collapse, and we had a beautiful bank, and I think the line in Iceland is closer to that these days. They've kind of forgotten the bigger story.
Huh.
Yeah.
Wow, that's and just so our listeners aren't walking away with so much kind of gloom and doom, should I say? where I mean, who's doing it right now? Where can you point to and say, you know what, their system's okay?
I wish I had better news for you, Brian. Look, I'm not an expert on every market in the world. I know the markets. I know the Swiss market pretty well now. I know the UK and the US pretty well. I have worries about all of these. I have worries about the US and the European markets.
From a corruption standpoint, or just from a fiscal standing standpoint?
From a corruption standpoint. The number of inside trades that goes unprosecuted everywhere is quite staggering, I think. I was here. I was in charge of market surveillance and enforcement, and we were sending about 50 serious insider cases a year, so about one case a week, to the Swiss public prosecutor and the Swiss regulator. But in both cases, they don't. It's always the cases are out there, and they'd be easy to do. And we could. So okay, I'll give you the good news. The good news is that you could clean this up really fast. You could have super clean markets really fast. Probably 6 months or a year or 2 years. It would be easy to do. You just need to start to do some big cases and have some headlines, and things will get clean really fast. But in order to do that, you need resources at the prosecutor level and at the regulator level. And in most cases, they don't have the right people, and they're not compensated to really go after things, and so they don't. And there's no public pressure to, because it's like if I break into your house and steal your TV, you're gonna call the police and demand something be done. But if I break into your pension fund as an inside trader and I slowly steal $20,000 or $50,000 from you, you will never know that you lost that money. So it's hidden. People often say these are victimless crimes. Like it's not victimless. The victims are just distributed, and so unfortunately there's not the public pressure to go after this. But it clean it up easy. The other piece of this is that no country's market wants to lose market share to other countries. So if one place, this is another explanation for why it's a bit corrupt. If one place would really go after and really be great at going after insider trading, let's say, then people would maybe not want to list their companies there, right? It's like, well, why don't I go to London? It'll be lighter touch there, so I'll list there. And so I think that explains that there's this kind of a race to the bottom, unfortunately.
Yeah. It's so complex, and it's I never want to be cynical. I always want to remain the optimist, but it's like you said, when there's cheap money and there's competition and these things, unfortunately, sometimes they do happen. And then it seems like the cover up ends up becoming far worse than the initial problem.
Yeah.
Yeah. So if you could give us a little kind of clue to the man behind the book. So you started at MIT as an engineer, which I think is interesting in and of itself. How did you go from there to Wall Street, and then why Wall Street to the corrupt Icelandic bank?
Well, So I always wanted to work in financial markets. I think since I was in third grade or something, I'd be like, do you remember when they had the stock prices printed in the newspaper?
Yep.
I used to go and like read those for some reason. I don't know what I was looking for, but I was like 9 years old. I'd be reading this, I'd just be looking at these stock info in the newspaper. I studied engineering. I really liked it. But then I worked briefly as an engineer. I actually worked for Bose Corporation, making speakers in Massachusetts after I graduated. And being an engineer was not that exciting. It was quite dreary. I wanted the excitement, I wanted the motion of markets and so on. I ended up joining a company in California during the .com boom years, and they were a spinoff from Oracle. And they were disgruntled ex-Oracle employees who wanted to beat Larry Ellison at his own game. They wanted to create application software that would basically use Oracle databases, but they thought that Oracle had missed the boat on the software that rode on top that helped like big insurance companies, for example, track their policies and track their clients. So I went. That was my first lesson in financial trickery and fraud, because these guys had super aggressive salespeople. Our customers were Enron, WorldCom, HealthSouth, Global Crossing. I mean, all the famous accounting scandals of those days were our customers at this company. And we were selling basically vaporware. We were selling software that worked a bit, but not really. And these especially Enron type companies were happy to buy from these high pressure sales guys. And on the back, we would kind of ship them some software that didn't really work. And then we would, on our books, book the full revenue for the deal. And a lot of us who worked in there were quite upset by what we were uncovering in there. So that was kind of the beginning of my interest in like financial fraud, or how easy it was to sort of trick people, even within a firm. And then I ended up working for about 5 years for Wall Street, actually, as you mentioned. And that was a great job because then I was writing software. It was the back office of one of the biggest banks in the world, and software that we were implementing was great. It worked. The client was happy. These were just great years. These were what we did for them was really, really enjoyable and really valuable. But I was getting burned out from that, and I got almost by fluke. I got a chance to do have a similar job in Iceland, and I thought, okay, I'll take a year off from Wall Street and I'll go to Iceland and just see what this is like. Maybe try to learn another language and broaden my horizons a bit. And so that was 2004, and I never looked back. Once I was in Iceland, the daily life there was just so much better than what I had known in Boston. Even though I was making a lot less money, it didn't matter. It was really nice to be there. And so I jumped from software. I jumped into the asset management side of one of Iceland's big banks, and also that was enjoyable. I mean, we were creating these great alternative investment products for the Icelandic pension funds, and it was. I mean, at first I was really happy there. I thought this was fantastic. But it was only after I started to see some of the trickery, some of the ways that we took money from smaller clients to benefit larger ones and so on, that I started to get uneasy. But yeah, so that was my journey to Iceland.
And now here we are, over 10 years later since this whole collapse. What do you got going on now? Obviously, great book came out that I hope everybody goes and takes a look at. But what's next for you? What's on the agenda?
Well, I've been working alongside writing. I've been working as a consultant. I have my own firm, Katla. I've been advising on investigations here in Switzerland, and also I've been advising NGOs, especially on the sustainable finance topic. However, this week I am interviewing with a big Swiss bank to work in anti-fraud capacity for them. So let's see. I'll either continue as independent, or maybe this is a good opportunity to get back into the big bank world. So we'll see.
Yeah, and it seems like a natural fit there in Switzerland. Why is that? At least here in the States, it seems that Switzerland in these Swiss bank accounts, it's just kind of synonymous with like easy fraud.
Yeah, but a lot of the bank secrecy is gone in Switzerland. I don't know if you knew that, but
so that's been cleaned up, or to some extent.
It's thanks to the U.S. So you guys could move everything over to South Dakota and Wyoming. Seriously, the U.S. put a lot of pressure through the DOJ on the Swiss banks. They said either you tell us all your U.S. citizen account holders each year, or you lose access to the U.S. dollar clearing market. So that's your choice. And so some of the banks here just folded up. There's been a lot of consolidation here. A lot of I think the oldest one was Wegelin was closed, and there's and then after the U.S. did that, then the other surrounding countries of Switzerland started to get aggressive as well. Germany came for its citizens, France, Italy, and so on.
And when you say aggressive, do you mean in cleaning up their act, or going after that market share of American money?
No, I mean that the German government said, okay, yeah, since you're sending the U.S. information on its citizens, we want to know all the Germans who have
accounts with Switzerland.
Oh, it's an information exchange. This information is just sent out to all the governments that want it.
Gotcha.
So that's been a big shift here. But then, as we saw in the Pandora Papers, I mean, a lot of that activity went to Wyoming, South Dakota. But I guess the U.S. now finally is joining the world. It has a corporate registry law. I don't know the details of that, but that gives me some hope. That's another thing that gives me some hope, because before this, you could create a company in Delaware or Wyoming or any of these states, and nobody can see who owns the company. And that's horrible for money laundering, right? I mean,
yeah.
Here, I mean, I own my company's Katla. You can just go now and Google Katla. You can find the company registry in the canton of Zurich, and you can see that I'm the owner. And that's the world standard. And that's, funnily enough, that's the standard that the U.S. pushes on everyone. Hey, you have to clean up your act. You need a public registry. But finally, it looks like the U.S. is going to do the same, which would be it's really a good step. Now, I don't know if the U.S. is going to be retroactive, which I kind of doubt. It would be nice if everybody had to, then you wouldn't have these oligarchs buying apartments in Trump Tower, for example, but you can't see who owns them because they hide behind an LLC in Delaware. Then you could just Google the LLC and see who owns it. So that would be something really good that we could do.
But it just always seems like if people want to be hidden or want to find a loophole of sorts, there's always a way. Whether it's the LLC in Delaware or then creating a trust that owns the LLC, or it just seems like there's always layers that can be added, Yeah,
but the problem is not like I have a 9-year-old niece, she can write me a trust certificate, right? But no bank is going to take that because they're going to say, what the hell is this? But what the problem is, you go to a bank in a financial capital, New York, London, Zurich, and you bring them a trust certificate from Panama or something, and they say, oh yeah, sure, Mr. Bibler, we'll give you an account, for this, give this trust an account. And that's the problem. I mean, that's the dirty secret of offshore finance, is it never, this is another thing that could be cleaned up virtually tomorrow. Just don't let banks take a business from certain jurisdictions, for example. And because the money never leaves. It's not like the money goes to Panama or BVI. Those places don't have really big banking infrastructures. The money always stays in the infrastructures, always in the financial capital. The issue is that those banks in Iceland, this happened a lot. People would incorporate, and the other thing people don't understand, it's not just about taxes. It's about hiding who's behind the thing. It's about hiding who's in control of the thing. But that could be cleaned up easily. Just say, hey, if you have if you want to do business with us, you have to come in as yourself. You can't come in behind a shell company from another jurisdiction. We won't take the business. So that would be an easy change to make. But unfortunately, as we saw in Pandora Papers, the beneficiaries are often the same politicians who would need to pass the legislation to clean that up.
Yeah.
So that's the problem there. But the problem is not that my niece writes a share certificate for me.
Yeah.
And
the one other aspect of that we've kind of touched on a little bit with interest rates. Do you feel that if interest rates internationally started to go up, that lenders would be a little bit more careful, a little more strict with what they're doing?
Yes. Yes. And but I think we're in a box now with interest rates because the global debt to GDP is at levels that I think it's never been before in the history of us as humans. The history of the financial system. I want to say it's 350%. Could be off on that, but I know it's higher than it's ever been.
It definitely is.
Imagine if you raise interest rates even 0.5% globally, what would happen? You have debt that you can't service.
Yeah.
And so I think the central banks are now in a box because they can't really raise rates like they should. Because now we have inflation. We have a big inflation problem. And central banker line is like, oh, well, we know how to handle that. Well, that's easy. We just raise rates like Volcker did. But I don't think that they have that. I don't think it's so easy for them now.
Yeah. It's such an interesting topic. And I really thank you, Jared, for coming on here. Is there anything else that you'd like to maybe share with our listeners, or anything you wanted to get off your chest?
No, I think I got plenty off my chest. I wanted to really thank you, Brian, for the chance to talk, and I really enjoyed it.
Yep. Yeah, this was fantastic. Very eye-opening. So everyone, thank you again for listening. Today on the show, we've had Jared Bibler. His new book is called Iceland's Secret, The Untold Story of the World's Biggest Con. Go check it out now wherever books are sold, and we look forward to seeing you next week. Take care. This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Brian Caderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Caderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Brian Caderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. OSJ 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey, 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA, SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Caderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.